The Resolution Foundation has floated an idea to swap 2% of employee national insurance contributions for a 2% rise in income tax. Is this the holy grail the government needs to raise funds? My name is Reeves and welcome back to this week's episode of Tax Tidbits, where the switcheroo could potentially raise £6 billion while making the UK tax system a bit less of a headache. National insurance and income tax have slowly become duplicate taxes, as while national insurance was originally linked to state benefits, this is now mostly redundant. The swap is a politically safer middle ground than fully merging the two taxes and could be the first step toward a simpler, fairer system. This will raise funds as some income is exempt from national insurance, like pensions and investment income, but would be taxable under income tax. Other ideas on the table include cracking down on unpaid small business tax, lowering the VAT threshold, though it's only just been increased, adding more sugar, salt and carbon levies, and tweaking vehicle duties. The Resolution Foundation's job is to lift living standards in the UK, particularly on households with low and middle incomes. But the question is, will their suggestions actually make it into Parliament? HMRC is now letting people apply to be exempt from making tax digital for income tax on the grounds of digital exclusion, covering people who cannot reasonably use digital tools due to age, disability, location, or even religious beliefs that clash with tech. Applications can be made by the taxpayer, an agent, or a helpful friend or family member and need to include the usual stuff like personal details, how they file now, and why going digital is basically impossible. HMRC will review and either give the green light or a polite no thanks, and you will get 30 days to appeal if needed. If you're already exempt from MTD for that doesn't automatically carry over, so you'll likely need to apply again. It's best to get applications in early, but just in case HMRC says no, applicants should be ready to dive into MTD anyway, so maybe brush up on the guidelines just in case. The UK government is stepping in with a £1.5 billion loan guarantee for Jaguar Land Rover to help keep its suppliers afloat after a cyber attack halted production at the UK plants this week. The hackers, calling themselves Scattered Lapsus Hunters, clearly picked a bad time and a bad name in my opinion, but that's unrelated, leaving small suppliers teetering on the edge and JLR losing around £50 million a week. Ouch. The loan under the Export Development Guarantee will be repaid over 5 years and is designed to get money flowing to its 700 suppliers and keep the wider supply chain ticking. With 30,000 JLR staff and another 100,000 people in the supply chain affected, the move aims to protect jobs across the West Midlands, Merseyside and beyond. Meanwhile, JLR is working with cybersecurity experts and the authorities to get production back online safely, proving that even huge companies aren't immune to cyber attacks and none of us should get too comfortable. Chancellor Rachel Reeves used her speech at the Labour Party conference to lay the groundwork for potential tax rises in her November budget, citing global economic challenges, trade tensions, rising interest rates, and long-term weaknesses in the UK's productivity as convenient scapegoats. She reassured people that main tax rates and VAT aren't on the chopping block, at least for now, but hinted that other tweaks like scrapping tax breaks, adjusting allowances or freezing thresholds could be coming depending on what the Office for Budget Responsibility says in their upcoming forecast. Her key aim is to keep public finances under control and protect pay packets, even if the specifics of who gets hit and how much are still very much to be decided. Half of UK adults now regularly use mobile payments like Apple Pay and Google Pay, with usage rising across all age groups according to UK Finance. Last year, 50% of adults used mobile payments at least once a month, up from 34% in 2023. While debit cards remain the most popular payment method, cash use continues to decline, falling below 10% of all transactions. Though campaigners warn that we can't ditch notes and coins just yet, as some people still need them, and digital systems aren't exactly immune to blackouts. The trend highlights a growing shift toward digital wallets and contactless payments, so businesses need to make sure they're investing in tech that can take these payments and backup systems in case of issues. Thanks for watching this week's episode of Tax Tidbits. If you enjoyed the video, give it a thumbs up and don't forget to hit that subscribe button so you never miss out on the latest updates. Catch you in the next one.